Art Collins here, struggling with a horrific cold. Don't get too close to me. In a previous video, I'd showed you how the first 5 minutes is a good momentum play to follow, first 5 minute trade of the day, and touched a little bit on some exit ideas. I want to expand on the exit ideas a little bit more here. So let's just go really quickly through what that first 5 minute idea was. Set your chart to 5 minutes, day session only, 8:30 a.m. through 3:15 p.m. Central Time. At the close of the first bar, 8:35 a.m. Central, buy if you're above the daily session open price. And at the close of the first bar, sell short if you're below it. Exit at 3:15 p.m. Central, session close. And this is what those numbers look like. Again, you can go to a previous video to get a little more detailed analysis. And then I showed you some of these optimization studies which said that you entered at the 8:35 price or time. And these numbers here in the black are how many 10-minute intervals after that you would exit it. So this would be 8:45, 8:55, 9:05, up to 3 o'clock. And what I showed you along the line was that wherever you exited on this idea, you still had a positive bias, not one negative result anywhere. But I want to draw your attention to something else this time. For the most part, hanging on longer is better than getting out quicker. Okay? If you look at the return on accounts, which is the net profit divided by the worst drawdown, that doesn't track to the end of the day as well. You get some, well, in this market, that's pretty much where you want to be at the end of the day. But going back to the S&Ps, for example, you could have gotten out 30 minutes after getting in the trade and had one of the best return on accounts in the field. Same with the Dow. But again, if you're looking at the net profit, the longer you hold the idea, it tends to be the better. Now, that's also true if instead of using arbitrary exit times, you use profit targets. Now, in a lot of the stuff I do, I've lectured that profit targets tend to decrease your overall performance. It's something that we just instinctively want to work because, you know, it's human nature to want to lock in profits, get out of the trade, move on to the next one. But as Trading 101 teaches us, the effective way to trade is to let profits run and cut losses short. But you can see that if you're looking again at the return on account here in the S&Ps, best figure is $200 profit, okay? This is pretty self-explanatory, $100, $200, $300, $400 profit. The 11 is not taking any profit target, getting out on the close. So again, you tend to get bigger and better the further you go along, although even in the net profit in the S&Ps, that's not exactly true. You got your best result taking a $700 profit. But the general tendency is you want to hold on longer rather than shorter, although I'm demonstrating something else. In this idea, at least, profit targets are not going to mess up your bottom line if you find the right areas. Okay, this is the Dow. Ideal profit target here is $200. It's the smallest of the markets. We demonstrate that holding longer is better in the NASDAQ, though. Your best result in terms of profit and return on account is at the end of the day. Russell, close to the end of the day is best for net profit, but here's your best return on account. $100 profit. So these results are not always a straight line as far as demonstrating a concept. They zig, they zag, they don't accommodate. I wanted to just do a straight ahead lecture on holding until the end of the day. I find out, you can do pretty well not doing so. But anyway, the overall strategy is a pretty good one. When you look at optimization studies that show you no red losses anywhere, it's indeed one of my most effective techniques in day trading. I want to get in early. I've got several systems that key off that. I want to hold it relatively long for the most part. Again, I've got different systems, and some of them will take profit. Another generalized concept, though, is I never want to be a short seller if I'm above the daily open, and I never want to be long if I'm below it. You just cut off those sides of your trades, and whatever your methodology is, I can almost guarantee you'll be doing better if you just follow that one rule. Always be going in the direction that you are relative to the 8:30 open. All right, so using the first 5-minute bar strategy, you'll enjoy an overall favorable bias regardless of where you set your exit. General rule, though, the later you exit, better will be your performance, but profit targets can improve performance, particularly on the first 5-minute bar strategy. Okay, working feverishly on this as we speak here. Keep looking for it. And thanks for joining me.